Advisor, and I'm going to teach you how to buy 10x stocks. Buy my course, bro. Wow, SoFi is the future.
Welcome back, Strongman Personal Finance. We got to cover SoFi's earnings. And of course, I had to mock Tanner from Future Investing a little bit because I warned you that boy does not know how to buy 10x stocks. Now, if you don't know who I'm talking about, it's this man right here. He runs a channel called Future Investing, and he's basically like, 24? He's a child. He's a financial advisor, which means jack all. I know you're grift, boy. And he's been pumping SoFi, and of course, he sells a course, Finding the Next 10x Stock. Okay, if you want to get lifetime access, it's only $340, guys. Wow. So, what happened to SoFi, his favorite stock today? Well, it dropped 10%. Now, I'm not the person to criticize when stocks go down, okay? Yes, SoFi went down, basically on bad guidance. In this video, though, we're just going to look through the earnings report because, there are some good things about SoFi, okay? There really are. Like, they got good growth. We'll see in a second. But I just want to warn you that, number one, don't put all your eggs in one basket, especially a barely profitable fintech like SoFi. And number two, don't trust YouTube clowns who tell you can 10x on a stock and then proceed to shill SoFi. Because as we can see, it's down 35% over the last 5 years, which if you're selling a 10x course, doesn't look good, okay? Anyway, so we got SoFi's earnings, Q1 2024. Blah, blah, blah. Let's dive into it. Anthony Noto my bopo. Let me make sure I'm sharing my screen. Sharing my screen, okay. Anthony Noto, CEO of SoFi Technologies. Our first quarter was exceptionally strong, demonstrating significant momentum. We delivered adjusted net revenue, which I don't know what that means. That's clown revenue, of $581 million, representing 26% year-over-year growth. Okay, so the revenue grew 26% year-over-year. That's pretty good. I mean, you can't hate that. Financial services and tech platform segment revenue combined grew 54% and represented a record 42% of a consolidated adjusted net revenue. Okay, so they have financial services, they have loans, and they have tech. Okay, so they're diversified, and I guess they're becoming more diversified, not just personal loans, which is actually positive in my book because the personal loans are getting pretty stupid. So they have some more metrics here. So we know their total revenue went up 37%. They swung from a loss to a profit in the first quarter of 2024 on the accrual basis of accounting. So overall, okay, that's fine. Let's look at some more metrics. So memberships have grown pretty significantly. They've added an F ton of members over the last year. We went from 5.6 million to 8.1 million. So they're attracting a ton of people into the platform. That's good. And then they can sell them products, right? Products purchased are up, not as much as members, but it's up. Okay. So products grew from 8.5 million to 11.8 million. Products by segment. Okay. Looks like they're growing their financial services products a lot faster than they're growing their lending products. Okay. They're providing financial services. So overall, we see a bunch of positive trends. We see members are growing. We see product sales are growing. Product sales by segment, mostly led by financial services products. I mean, it's not the worst thing in the world. For the first quarter of 2024, lending segment GAAP net revenue, this is the revenue that matters, ladies and gentlemen, decreased 2%. Higher loan balances and net interest margin expansion drove strong growth in net interest income of $65 million. Okay. Net interest income of $266 million significantly exceeded directly attributed expenses, blah, 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 blah. So GAAP net revenue decreased. Okay, that's probably a little bit concerning right there, because while people say this is a tech company, it's also a bank. It's kind of a clown bank. Okay, when you think of a bank, banks, they give out all types of loans, car loans, they give out freaking home loans, student loans, whatever. The biggest loan balance of SoFi by far is personal loans, which are more risky than your average loan. That's scary to me. Okay. So let's see. Lending segment. So, okay. Let's see. Net interest income is up. Non-interest income is down. And that's why the total net revenue dropped of income is. We'll see that later. That's the reason that the total net revenue dropped. But their net interest income, their income they derive from loans, mostly personal loans, all the interest they get from that, net of interest paid for deposits was positive. Okay. Let's see. Total contribution. So the total profit from lending is down a little bit. Okay. That's not very growthy. Let's see what the majority of loans are. So, of course, we can see that as of March 31st, 2024, loans at fair value, 15 billion is personal loans. The next is student loans. And then we got home loans, which is a tiny, tiny portion. I don't think most banks have the vast majority of their loans as personal loans and student loans. Okay. When you look at a bank, like you got to think like, okay, what's the risk of a bank? Well, you got the risk of bank runs. Okay. They don't have enough cash. Everybody takes their money out. It collapses. Or they have a bunch of clownish loans or high risk loans. Some banks have low risk loans or they're more conservative. Some banks are more aggressive. I think SoFi is being super aggressive with personal loans. As a matter of fact, I get letters in the mail and I get emails from SoFi. You want a loan, bro? Bro, you want a person? No, I don't want a freaking personal loan. I'm not a degenerate. All right. This worries me. This really does worry me. That's a very heavy balance of personal loans. Higher risk, higher interest loans. What are they secured by? Are they collateralized by anything? I don't know. Weighted average coupon rate is 13%. So basically the weighted average, the coupon, the actual stated interest rate of these loans for the personal loans is 13%. That's a high interest rate. Okay. That if anything ever goes bad with the economy, SoFi might start running into issues. That's all I'm saying. Okay. That's the risk that you take with this bankity bank. So let's see. Origination volume. So where's all the growth coming? Well, they had 11% increase of originations from personal loans, 43% from student loans, and 274%. That's actually encouraging as they're trying to grow home loans. You know, I mean, hopefully they're not clown loans, but at least they're like diversifying their book a little bit. But still, the vast majority of the growth is coming from personal loans, higher risk loans. Average loan balance, let's see, $24,000. Okay. Look at the student loans, $44,000, then home loans, $282,000. That's interesting. You would think with, I don't know, have homes not risen? They must have risen since last year. That's just weird. The average loan balance for home loans is the same, despite home prices going up. Okay. Anyway, so basically personal loans, but they're starting to grow their home loan originations, which is good. Okay. Let's see about technology platform. So their total technology platform revenue grew 21% from 77 up to 94. Okay, that's good. And it actually has a contribution profit. Their contribution profit, their profit from the tech platform minus direct expenses doubled. So, I mean, they're still growing their other sources of revenue, but this is still mostly a bank. And it's a clown bank at that. Okay, but I mean, they're making progress, you know. It's good they're diversified. Financial services. Net interest income's up 106%. And total net revenue financial services is up 86%. And they have a contribution profit. Contribution profit, like I said, is revenue minus directly attributable expenses. Direct expenses. So, okay, so financial services is profitable. They double the profit from their technology platform. And basically, it's just mostly loans that are kind of slowing down there a little bit. Okay, interesting stuff there. So let's go ahead and see, okay, what do they offer for financial services? Money, checking and savings accounts up 61%. Man, people are throwing their money in this bank. Invest up 1%. Lame. Credit card up 32%. Referred loans up 34%. Relay up 64%. And at work up 31%. So they got some pretty impressive growth, except for freaking investing. I mean, they got a lot of crap going on. So here's apparently where they bombed. Okay. 2024 remains a transitional year as the tech platform and financial services segments together are expected to drive growth and increase from 38% to approximately 50% for the full year of 2024. Management expects to deliver adjusted net revenue of 2.39 to 2.43 billion for the full year 2024. So if we look at the full year, I don't know if stock analysis would show that. So maybe we shouldn't compare that. Let's see. This guidance assumes lending revenue 60. Okay, yeah. So their lending revenue is basically plateaued. But honestly, that may not be a bad thing in my personal opinion. I like the other revenue sources better than the clown revenue they get from stupid personal loans and student loans. Oh God. Okay. Let's look at the financial statements. Financial statements make more sense to me than all the Google gobble they put on there. So here we have the income statement. Okay, this is the condensed consolidated statement of operations and comprehensive income or loss. And we have a comparative income statement here. So we have the first 3 months ended December 31st, 2024 on the left, and the prior year, 2023 on the right. So we have basically a massive increase in interest income and whatever this other income is. The total interest income is $665 million. Okay. Their net interest income, when you net out securitizations, deposits, corporate borrowings, is $402 million. Okay, so pretty significant growth there. Non-interest income. Let's see. Loan origination, sales, securitizations. So I think I saw somewhere that they recognized a gain from, I think they like paid off some debt. If I'm remembering properly, they issued some stock to pay off some debt. And I think they recognized a gain on that. So I'm wondering if that other income right there, a big part of that is from them paying off that debt. Because when you pay off debt, you can recognize a gain or loss on that. So I'm wondering if that's the case. Because their total net income was 88, but their other income here was 92. So whatever. Okay, let's see. Let's see how they did with their expenses. So tech product development is up a little bit. They cut sales and marketing expenses. Cost of operations is up a little bit. Nothing crazy. General and admin is up a little bit. Provision for credit losses is down. That's interesting. So basically in accounting, you have to kind of estimate what percentage of your loans you think are going to go bust. And you have to accrue it in the current period, even though your loans may not be defaulting. So it's kind of an estimate. So when you see provision for credit losses go from 8.4 to 7.1, at least the management thinks that they're not going to have that many losses on their loans. Okay. If you start to see this go up pretty significantly, you might want to be concerned. Okay. Because basically management's like, oh crap, maybe we're going to lose more freaking money. So, but I mean, I guess that's not the worst thing in the world. Let's see. And of course, they have a positive net income. So overall, I mean, I don't know where this other income is. I don't know what this is. I don't think it's said it anywhere. If it does, it's in some hidden footnote. But they are GAAP profitable. Okay. Let's see stock. Look at this dilution right here. Ooh. How much stock did we issue here? 982 divided by 929. So they diluted by 6% in the course of a year. Okay. Better put that to good use. Diluted, weighted average common shares outstanding diluted. So dilution is diluted weighted average shares outstanding. There are some convertible securities that a company can issue, like debt. Sometimes debt that a corporation issues can be converted into common stock. It hasn't been converted yet, but it could be. So that's kind of factored in when you're calculating what your potential total dilutive issuance of shares could be. So if you factor in diluted common stock outstanding, we have a 12% dilution. That's a little bit more significant, okay? So if whatever instruments they gave out that have conversion features, if those are converted, That's 12% dilution year over year. That's pretty crazy. Okay. The actual dilution was 6%, but it could have been up to 12% had everything been converted at that time. That definitely affects your profit and loss because look at the earnings per share basic, 8 cents, and the earnings per share diluted, 2 cents. Yeah, you see how dilution affects you? Look at that massive drop in earnings per share with dilution. Yeah, okay. Does that make sense? So, here's the balance sheet. We got to look at the balance sheet, of course. So we got a little increase in cash, a little decrease in restricted cash. Investment securities are up. Okay, I wonder if they recognize some gains on those. Loans held for sale at fair value, down a little bit. Loans held for investment. Loans held for investment at amortized cost. So we can see, their loan book grew a little bit for investment. They have a ton that are held for sale. Let's see. Property, plant, and equipment. Nothing crazy. What's the fair value? Okay, so these are at fair value. That's good. Because sometimes you can put like loans held for sale to like, I guess, try to hide losses, but at least they're at fair value. So the loans that are held for sale dropped a little bit in value, but nothing crazy. Let's look at the debt. Deposits are up, decent amount. Let's see, accounts payable. Yeah, they definitely paid off some debt. You can see that. And so you can actually see, the debt went down. It went from $5.2 billion down to $2.8 billion. And then we could see that the common stock went up. So I'm pretty sure they might have issued shares to pay off some of the debt. And they may have just used some cash to pay it off as well, or whatever they did. But they paid down some debt, which I guess that's okay. Whatever. Not my company. So overall, I would say it's actually encouraging that their personal loans has peaked, and a lot of their growth is coming from other things like investing and credit cards. Because the thing that scares the crap out of me about this company is the personal loans. It always did, and it always will. And it's nice to see that they're actually like, I don't know, kind of diversifying a little bit. But that's kind of my thoughts there. So honestly, not the worst. I mean, I'm not endorsing this stock. I'm not buying this stock. I think there's a lot of risk in it, but there are some encouraging signs going on, especially the diversification away from personal loans, which is my biggest concern about this freaking company to begin with. So that's my thoughts. Let's see. Don't forget to sign up for the Discord, boys. Ugh. It's a free Discord. Click the link. That's right. You don't pay for it. And buy my book, bro. Buy my book, bro. It's on Amazon. Stop being a broke loser. It is a real book that I wrote. It is on Amazon. Is Tanner going to bring you back? Like he said, if he pays me, I'll go back on. I'm up 30%. I'm thinking about selling. On what? SoFi? Should I take my money out of SoFi? I mean, that's a personal decision, man. I don't get the appeal of this company. I got Bank of America. It's just risky, man. Like, I don't get it. Like, it's a clown bank. No, I already talked trash. Did you guys not see my other video I posted? Dang, dong, don't hate it. I've got a lot of SoFi. SoFi is a great bank and will improve. Don't get dong. Well, it's not just a bank. It's also a fintech platform, bro. Out of all the socially pumped stocks, I like SoFi's business, but I also like Hood. Look, Hood is a clown stock, dude. I think Hood is worse than SoFi. I would never touch that garbage with a 10-foot pole. Let's see. I only invested because they have stadium naming rights. I made a whole video about Tesla. Have you heard of the money guys? Not Grift is just a good person. They're okay. They're financial advisors, but whatever. Let's see. Strongman, why you decided on VT and not V? I mean, I really have no objection to either of them. VT has a slightly lower expense ratio. But VT Wax, I have some of that too in my Vanguard. It's just convenience, really. I can afford it. Yeah. How about you spend nothing on a course? The amount of student loan refinancing mail. Yeah, it's annoying. For me, it's all personal. I keep getting the person. Like, I'm not in that much. I'm not in. Well, I have debt. I have like a mortgage and a car loan, but like, I don't need a personal loan at 13% interest. SoFi, thank you. Stop sending me freaking mail. I don't even know how they got my address. I probably did it on accident when I was making a video. Let's see. The amount of hype SoFi gets is something I'll never understand. I mean, it's a very complicated entity. Like, I don't think any of these guys understand what's going on. And, like, with the loans, like, do you really understand what's going on? Do you really trust management's provisions for credit losses? That's on you. I mean, I don't like it. Dilution is, and yeah, that's pretty crazy dilution at 12%. You literally saw it with the earnings per share. It was 8 cents with the basic diluted earnings. And then if you factor in, if you assume that everything that could be diluted, was converted to common stock, it was 2 cents. That's a massive drop in earnings per share. That is the effect of dilution. Dong wants in SoFi. I can hear it. So, no, I'm sticking with VT. I don't have spare money to buy this garbage. Let's see. You should take out margin to buy Tesla Y and get dividends and income to pay off your debt. You know what? That's right. I'm tired of work. I'm tired of going to work every day. I'm just going to buy Tesla Y and I'm going to get $15,000 a month of dividends. And it's going to go up because it's compound interest. My money for the paid Discord went to covering my Tesla shorts. Well, I'm sorry to hear that. So once again, this is a free Discord. It is now free. Come join the Discord. I'm in there. There's other celebrities in there. And we can all just have fun together, and you can help me find video topics because I don't have the time half the freaking day. And, of course, see, I'm trying to become a salesman like Meet Kevin. Buy my book. See? Stop being... Look at this loser. You want this to be you? Stand there with his flowers after he got rejected by a 50th girl. He's got no money. He's broke. His parents disowned him. Buy my book. It's on Amazon. All right. Talk to you later. Cheers.